Morning to all traders, and welcome to this Wednesday's Market Insights video. Today we're going to talk about gold, the metals in general, and also oil. Last week, if you remember, we talked about how the UK was trying to ease visa conditions for Hong Kongers. Now, on top of that, we have the UK yesterday taking a decision to strip off 5G networks of any Huawei equipment. So this is going to take obviously a few years going down the line, but despite the fact that is definitely going to affect the relationship between the two. Now, on top of that, if you recall, I mean, the situation, generally speaking, I mean, there is so many fronts different that we need to look against China. Also, the US is the one that we need to pay attention closely, because obviously this is where it all started between them two. We have now the Trump administration also signing a bill for Hong Kong, clearing the way for more sanctions against China. That is, of course, in a move following the national security law imposed in Hong Kong from China, and another series of retaliation from both the countries, if you may. And it seems to be supporting gold, at least for the time being. At a time where we'd suspect or expect at least the Moderna vaccine results at least pushing gold lower, well, we get tensions escalating again now in many fronts, and is going to increase volatility for sure in the gold markets. So I'm going to go ahead and start with gold today. We've been looking at this move to the upside for a while now. I want to see the 1865 taken out. Okay, we still struggle above the 1819. Actually, 1825 is a very good level as well, because it's the high momentum candle of 2009 or so, the opening. I see this as an ending triangle. We talked about this move last week. Well, it seems to be still an ending triangle. I'm not sure this is the end of it. I doubt, actually, because this looks quite corrective, right? So there is probably room for more upside. I want to take that out, the 1861, 65, because it's the 3-4 Fibonacci extension, and also the 2-3 Fibonacci extension, and 4, which indicates it's where the last fifth wave is going to end in this diagonal pattern. Jumping on oil. Oil, well, has really stayed up here for a while. So we had to look at this with a different eye now. I'll look at this as expanded flat, right, as we talked about that last week. 1, 2, 3, 4, 5, yeah, coming in with these, all these move considered as wave 2. Now we've done wave 1 down. This is an ABC for wave 2, and we could start moving lower for wave 3 now in order to reach the 32.50 or so for an expanded flat. Now, there is also the scenario that we're still going for a wave 4 then, and then 5, right? But we should also look at this option over here, that, well, we've had AB done, and C is done here with 4. And this is going to be 1, 2, 3, 4, 5, right? Which means that we don't have an expanded flat over here. This is just an ending diagonal in C, okay? And we move down it impulsively for the completion of the ending diagonal. Now, or of the impulse, 5-wave move impulse in the primary degree. Now, we could as well see this as a W, X, and Y, right? So, which means we're going to get a wave X, ABC, and then another ABC move, and probably looking to break to fresh highs. But in the short term, I see more downside in either case. On silver, we were expecting this to be some sort of expanded flat. Obviously, with this break above that level, previous wave B, well, we had to change our view. That means that ABC was done down here in wave 4, and this is an ending diagonal. I see more upside here as well. I want to take the 1977 out for wave 1 and then start moving lower, anywhere between the 16 and 15 or so, 16, 60 and 15 or so correction, and then we can start looking for price to move up. I want to see one more upside move, as I said, for the ending diagonal to complete its pattern, and then start looking for sales on a corrective bearish move. And last, let's have a quick look on natural gas. We talked about this change in pattern as well last time, right? We were looking at this being a 3 down here, A, B, C, 4, and then another move to the downside for 5. Now, this is the last wave to the upside, which is a 5-wave impulse, since we are considering this to be an expanded flat, right, with a B false breakdown here. This is a multi-structure move, A, B, C, right? So I'm expecting more downside indeed. Okay, we could actually go down to 158 or so, because that looks like a W, X, and Y as well. So wave 2 can be around 1.5 or so, and then move up for 3, 4, and 5. That's going to be minor 3, then 4, and then 5 again to take out wave C, wave 4, and then continue lower for fresh lows below the 141 in the longer term. So I want to thank you for watching today once again, and we'll speak again tomorrow.